Gold dumps and Bitcoin pumps. Let's take a look at the price of gold, silver, and Bitcoin for this week. Of course, this is an analysis brought to you by Ainslie Bullion and the Gold and Silver Standard. We'll start with gold, then we'll do silver, then go to Bitcoin. Of course, use the time codes below to go to your favorite metal or crypto. Right now, we're looking at gold on the weekly time frame. It's priced in US dollars, $1,938.39, and we're using the tradingview.com website. Let's pop on our indicators. Last week, we made the video, hold the trend line. Pretty simple right there. Needs to hold this trend line, and so far it has. It has opened this week. Today's Wednesday, the 21st of June, 2023. It's opened this week red so far, but we have held the line so far. So I'll just keep it the same as last week. We need to hold this line. If we do break down and come down to, say, around about 1880, that's okay. I'm not too concerned. Below 1880 is where I start to get concerned that we're heading down here. Now, what am I looking at? If you can see it too, this is only a potential, certainly not saying it's going in this direction. We might just see, a wonderful support here of this downtrend line. But just bear in mind, if we do break down, I would say below that 1880 level, if we come down to anywhere between 1850 to 1800, I would say that's a formation of a head and shoulder. So left shoulder, head. If it finds support at 1850 or lower, particularly at 1810 or 1800, I would say the head has been formed of a head and shoulders. Then you're potentially looking at a shoulder and a big head and shoulders pattern, and down we go. Doesn't necessarily mean we always go there, but just bear that in mind. There's more risk associated with that if we head down to, say, 1850 to 1800. What I would ideally like to see is this hold as support. If it doesn't, I need 1880 US dollars to hold as support and quickly break back up above. So hopefully like a fake out and then head on its merry way. I won't talk about the targets moving higher, etc. I've just got this long-term uptrend line right here. It's still around about your 2120 to 2130 level is the next sort of resistance point, I think. But we just kind of got to keep an eye on the downward price movement at the moment. So that's really it for gold. Must hold this line, and then you've got those couple of indicators that I've just given. Also take a look at the relative strength index as well. This is on the weekly time frame. It is trending down at the moment. You do have a support level, and we haven't broken it just yet. Horizontal line of around about, it's at the 50 mark right there. So at the halfway mark, we haven't broken below the halfway mark. If we break below 50 on the relative strength index on the weekly time frame, that is, I would suggest that lower prices would be coming. So far it has held. So let's see, just keep that in mind, that halfway point. If we look at it on the monthly time frame, let's have a look now. There's the halfway. I'll just get rid of that. We're actually in a slight uptrend, although we've just ticked over on the monthly as well. Looking a little bit more positive on the monthly time frame. We came down to this area around about your 40 level on the relative strength index down here, and that has acted so far. That was support here. If you can see that support on the left-hand side right here. Same, acted as support, and then a nice break above this average, this moving average of the relative strength index. So break above this yellow line, come back as support, and a break above. So more positive on the monthly time frame. So a little bit more, don't know what's going on the weekly time frame. A little bit more positive on the monthly. Let's take a look at the quarterly as well, and we'll pop off these indicators. And what you'll notice right here is potential triple top, but maybe not locked in just yet. 1, 2, 3, a higher high right here. Now this quarterly candle, which started in April, that actually comes to an end in around about 9 days at the end of June. So I think for me, we're still looking okay. I don't think on the quarterly yet that we are signaling an absolute triple top. For me, the price would have to get down to and close below, if you can see this level right here, this on the quarterly time frame, this candle right here, and the high of that was at 1,916. Now, for me, If we come below here, 1,916, and we close below 1,916, and particularly you can see this old high is here. So it's around about your 1920 to 1916 level. If we close the this monthly candle or this 3 monthly candle, quarterly candle below there, then I'm getting concerned that it's a triple top, and then the preceding 3 months are going to start heading down to this kind of 18 level, 1830 kind of level. So just keep that in the back of your mind. Do know that the relative strength index on the quarterly chart trending down, if you can see that trend line. Now, I'm not saying it's all doom and gloom for gold in the next number of months, etc., but we just do have to keep these into consideration. So you can see right there a little bit of a downtrend in the relative strength index as well, and we haven't broken and held above the average of the relative strength index, this yellow line as well. So let's see what happens with the price of gold. Just really need it to hold above this trend line. Gotta hold. So that is gold. Let's take a look at silver. Very similar kind of setup, except we have broken back down, unfortunately, just in the last couple of days. I'll show you the weekly time frame. That was the weekly, sorry. I'll show the daily time frame. Yesterday we broke back down, unfortunately, so we're spending more time back in this symmetrical triangle pattern right here. On the relative strength index down here on the daily time frame, you can see we did bottom out, and we have gone into, and I'll show you right there, we did hit sort of oversold territory, and we have broken back up. But now on the daily time frame, this yellow line, which indicates the average of the relative strength index movement, you can see we have broken back down below there. Not looking great for silver in the next at least few days. So for me, what are the next levels that we absolutely must hold? Similar to last week, and I'll mention them again. You have this area here, and we're probably going to come down and test it now, of between about $22.50 to $22 roughly in US dollar terms. Now, for me, massive line in the sand is that $22 mark, the bottom of this rectangular purple rectangle right here, the bottom of that, round about that $21.90, $22 level. If that doesn't hold, then I'm certainly going to say we're heading down to this level here, around about your $20 roughly, maybe coming down to the bottom of this symmetrical triangle pattern again. Is this also playing out? Let me know what you think. Post a comment below. Does this look like it might be playing out its own head and shoulders pattern? Shoulder right there, head right there. I don't know. I don't know whether you could call, and let me know what you think. I don't know whether you can call this level here of $22.60 a fully formed head of a head and shoulders. I'm not so sure about that. Can you call it just coming down to here, the head of the head and shoulders, or would you have needed to have seen it come down to that sort of $22 mark first? I'm unsure about that. Post a comment, let me know what you think. Definitely though, I need to see it hold as support, the $22 level. Let's pop on the weekly time frame. And on the weekly, yeah, you can see it very clearly. A red week indeed. And similar, just needed to hold there on the relative strength index down the bottom on the weekly time frame, underneath the yellow average of the relative strength index, and we are trending down at the moment. Not looking great at the moment, so let's just see what happens. We are back in this symmetrical triangle pattern. I'm going to just harp on it. Have to see it hold $22.90 to $22 US dollars, that is. Otherwise, bang, we're heading down there. Now, might we find support at a particular Fibonacci level? Could it be around about here at $20.70? Or do we come sort of smack down and find support here at this bottom of the symmetrical triangle pattern, this uptrend line right here? Yes, quite possibly. So around about that, I would say $20.50 to $20.70 is where you would find support if we do not hold $22. Let me know your thoughts. Where do you think gold and silver are going, at least in the next number of weeks, where I'm positive for gold and I'm positive for silver in the longer term? But let's talk about some sort of micro movements. Where do you think it's going in the next few weeks? Post a comment below. In order to, of course, let's just talk the opposite side. If we just, the next couple of weeks, we just invalidate that and it's a fake out and we just head up, Of course, we've been talking about the very, very infamous level of $26. I won't go on about all the previous stuff with $26. You can watch the previous videos with that. Bear in mind, though, once we break out of 26, it's not completely smooth sailing. You do have this $30 to $31 level, particularly here, this Fibonacci level, and I'll show you that. Let's go back on the weekly time frame. Where are we going back to? I'll have to probably pop this on the monthly just so you can see it. Yep, there we go, and that's there you go, it's the 61.8. So where are we? Right here, it's the old high back in 1980 and the old low. That's where we're taking the Fibonacci levels from, this high and this low of $3.50 roughly back in 1991. And you can see that the Fibonacci levels, while not perfect, they've certainly been able to be somewhat predictive. You can see there was a big level of resistance at the 38.2 level, another level of resistance there, level of support, look at that right there at the 23.6, again based on this old high and this old low. You can also see that we came up to the 61.8, and that's what we're talking about here, this next level, around about $31. While we sail through, if we sail through 26 and we spend a bit of time above 26, that's a big breakout level. So don't just assume we're going great guns once we break above 26 and hold. It's really got to break above 31 particularly, and hold above that in order for us to say, oh, in the next months and years coming ahead that we're going to, surpass previous all-time highs. I still have it in for now that the most reasonable target for silver for the end of 2023 to sort of where it would realistically top out at, if we do indeed keep going up, is between your $37 to $40 level, and I will keep that for the moment. Let's just see where the price goes in the next number of weeks. Post your comment below to let me know where you think it's going to go. All right, that was gold and silver. Let's look at the Bitcoin pump. I'm going to show you this first on the quarterly time frame because we posted this just earlier today on Twitter about this particular, and I'll actually use that's the Binance one. I will use not the Coinbase, I will use the index right there. We'll take off the indicators right now. So this is the big Bitcoin index price. It indexes a lot of the other exchange prices into a sort of a general average, and this is the one that goes all the way back till 2009. So it's the one that has the longest amount of history. So what you can see here, very clear uptrend. We're not going to go through the giant macros of Bitcoin, etc. But what I wanted to point your attention to was just today, only just a couple of hours ago, on the 3-month candle, so each candle here is 3 months, it went from red and it just ticked up above, it was above 20, let's see, it was above 26,475, I think it was. Let me just check that. It was above, right there on the daily time frame. There we go. Yes, it was around about... it was around about 26,460, something like that. Let's pop that back on the 3 monthly, and actually I can tell you exactly where it was. We opened at, there we go, so 28,476. So it broke above 28,476 is where it opened at, and because we're now at 28,779, we are now in a green 3-month candle with 9 days to go until the end of this candle. If we stay green and if we close this 3-monthly candle green, it's looking more likely that we'll have some extra pumps coming ahead. Now, what could be fueling this recent pump? And have a look at this on the daily time frame. We've just pumped just in the last number of hours right here, and then we had the opening of the new day and it's continued the pump. It's pumped up to a high of 29,031. You can see that on this particular index. Now, what's fueled that? There was lots of speculation, but about 5 or 6 days ago, what you have is BlackRock. BlackRock, the largest ETF. If you have no idea what a Bitcoin ETF is and why one of them getting approved is such a big deal, let's go over to Twitter. Now I'm going to introduce you to one of our good friends, Ben Simpson from Collective Shift. He has posted this just today, and let's take a quick look at it. In probably the biggest news of the year, BlackRock has filed for a Bitcoin ETF with the SEC. But what does that mean for crypto? So what is a Bitcoin ETF? A Bitcoin ETF, simple terms, makes it easier for Bitcoin and Bitcoin-related assets to be traded on a traditional stock exchange. So rather than having to go to a Binance or a Coinbase or anything like that, you can just go to your regular stock market platform that you would use, and you'd be able to buy Bitcoin like you're buying a share. So lots of traditional investors want to buy Bitcoin, but they get intimidated by crypto, holding it on wallets and Ledger Nano S's and your cold wallets and your hot wallets and your hardware wallets as well. So they don't know where to buy it or how to store it and when to sell and all that. So with a Bitcoin ETF, BlackRock will purchase the Bitcoin and store it on your behalf if you were buying this Bitcoin ETF. Now, over at Ainslie Crypto, ainsleycrypto.com.au, we're of course big into holding it yourself. So we certainly put forward that it's better for you to hold it yourself. If you don't hold it, you don't own it with gold. So similar with crypto. So we do encourage our people who are purchasing to buy a hardware wallet or put it on a cold storage, etc. And we can certainly handle all that stuff for you. But what you have to understand is there is a vast swath of people who just don't want to do that. They don't know how to do that, and they would much prefer to purchase it as kind of like buying shares. And that's currently, because you can't do it, it's currently holding back a whole bunch of retail investors and probably institutional investors as well. So with this move, traditional investors can have access to Bitcoin without actually having to hold the Bitcoin in their wallets. They don't want to go through all that stuff. They don't have to custody it, store it on an exchange or a crypto wallet, or even worry about it being stolen. I don't know about that last one, about worrying about it being stolen. What if BlackRock gets hacked, for example? I don't know. But as you might imagine, an ETF will make it accessible for traditional stock investors to access Bitcoin. That's a huge market. Now, however, it is not as simple as it sounds. The SEC has never approved a spot Bitcoin ETF in the past 10 years, with all of these different asset management companies applying for one. So many have applied, and the SEC has never approved one so far. Now, they have approved a futures Bitcoin ETF, but that's a different thing. It's not spot Bitcoin. It's different to just a regular spot Bitcoin ETF. Now, what is different about BlackRock's application for a Bitcoin ETF? Now, BlackRock's is a little bit of a different beast. It's the largest asset manager in the world, so it has a lot of political power. Yep, true. Governments around the world invest their savings and their bonds and their treasuries with BlackRock, and they manage 10 trillion plus in assets, though they're a huge company. So to put that in context, the Bitcoin market is only 500 billion today. So here's the big kicker though. BlackRock, as part of their application, have also added a surveillance sharing agreement. And this was missing from all other applications for Bitcoin ETFs that preceded it. No one else said, other people's applications were, hey, SEC, scratch our back and give us a Bitcoin ETF. But we're not going to scratch your back in return. But BlackRock has said, okay, scratch our back and approve this. We'll scratch your back and give you surveillance sharing as well. So with a surveillance sharing agreement, the SEC will be able to transparently track all information about trading, clearing, and customer identification of Bitcoin. Now, say what you want about surveillance and this agreement. Now, you might completely disagree. And of course, we have our own thoughts on that side of things as well. But it doesn't negate the fact that this could be a massive thing for traditional investors, retail investors, and also institutional investors as well. They've dangled the carrot of surveillance sharing agreement. Again, whether you agree or disagree with that general notion of sharing surveillance, etc., it's still big. And it's a big differential from BlackRock to all the other applications that have preceded it. So this seems obvious because if the US government is to approve a Bitcoin ETF, they need to know that there is no monkey business happening under their noses, nothing illegal happening. So those are the key differences. BlackRock, huge asset manager, also dangling the carrot of the surveillance sharing agreement as well. Does that mean it will absolutely 100% get approved? No, but there's a bit more of an advantage to it. So here are the key dates to watch. BlackRock filed the ETF application on June the 15th. So again, that was 5 or 6 days ago, and we didn't see a massive pump. So what was that, June the 15th? If we go back, here's June the 15th right here. So well, there you go. There's June 15th when they filed the Bitcoin application. What do you know? Let's pop on what do you know? Look at that. How fortuitous was that? You've got this long term, well, I'd say long term, going back till December or the start of this year, a trend line, a very clear trend line. And then we had this pop up to about 31,000, a consolidation during time. Gee, we're coming back down to this trend line here. Gee, I wonder if it will hold or I wonder if it will break down. June 15th, what do you know? BlackRock announces a Bitcoin ETF, and that happens to possibly signal a bottom, at least so far. But it didn't pump the price. We didn't go like that. So it did take a little bit, a couple of green days, a couple of consolidations, and now a big pump in the last few days, in particular the last 2 days. So very interesting, isn't it? The timing of a Bitcoin ETF to coincide right with that trend line right there, the support line. So the next step is for the SEC to either approve or reject the application. Now, they have 45 days to make their first statement. What they tend to do is in the past, they have chosen to delay the application decision within that 45 days. So they say, no, sorry, we need longer. Generally, that's a bad sign. So if it's not approved within this first 45 days, it's more likely that the SEC may not approve it, but we're still within that 45-day window. And given the carrot dangling of the surveillance sharing, etc., and BlackRock being huge, a lot of people think that it may happen. We're on the fence of it. We don't know whether it will, but you can certainly see that at least in the couple of days recently, this has bottomed out so far. And maybe some people, you never know, some people who have inside knowledge, etc. Maybe some people already know that it will get done. Maybe they're buying up before the news comes out, etc. Inside trading, of course. You can never get rid of that because we are human and we have human incentives. But maybe that's the case. But we don't know just yet. So the SEC must make a final decision within 240 days of filing the application. That's around about 8 months. I think we're going to know within the 45 days, more likely. If they do delay it, then it probably not. So why did they do it? BlackRock sees the long-term potential in Bitcoin. That's the most obvious answer. So that is one of the reasons why, and probably the reason why we're seeing the Bitcoin pump. Very interesting timing right there with the bottom on June 15th. Let's take a quick look at the next levels of resistance. So I'm going to pop it back onto the Binance chart because I have a few different charts going right here. Again, this is on the daily time frame, and this goes back to actually goes back quite a way. We'll pop this on the weekly time frame. This goes back to September of 2017. Okay, so you've got the pump back here to 20,000, the pump back here to 15, the COVID March dump right there. If COVID hadn't have happened, you could just completely erase this. That wouldn't have happened. So you would have seen that more of a flattening out, more of a consolidation, but we did have that black swan event right there. Of course, back up to the 65 to 69K. And recently, you can see this downward, whatever you want to call it, downward movement, trend line, etc. It was broken. It broke out. It acted as exact support around about 20,000. And then you've got this purple box right here. We did land somewhere in there. We did find resistance there. And now we're back within this purple box. I'm going to actually, while I've got it, I'm going to extend that out a little bit. There we go. So as you can see, we're in that box range of around about $27,000 to $32,000. I'm also going to extend this one out as well. So right there, this is the next areas, in my humble opinion, not financial advice, that we have to play with. So obviously, if we're going to go great guns from here, if on the 3 monthly chart, if we do close above, and we do have a green candle technically closing for this quarterly candle right here, you may see the price head up. From here, I'll pop it actually back onto the monthly. What you can see is the gap between the two rectangular boxes, the purple boxes right there. So I think the next level of resistance will be around about that $32,000 mark. If we sail through 32,000, I don't see major resistance. So that's why it's blank right there. This is kind of like a no man's land, in my opinion. I think you wouldn't see resistance until the bottom of this purple box, and that's around about $38,000. And I think you would see resistance at somewhere between that 38,000 all the way up to this previous high back at around about $48,000. Now that's over the next couple of months. This is the monthly time frame right here. So you've got, next month, the month after, so at least sort of 3 to 4 months before you would see that kind of area being hit, if indeed we do continue up from here. Breaking down from here, I would be looking at around about your 20,000 to, around about 20 to 22,000. Around about this general area right there as a level of support. If we do break down, I'm more biased to the upside for the moment on Bitcoin, so I won't put in those levels just yet. I will stay biased to the upside for Bitcoin, at least for the next few months. Let's just see what happens. Could this be an absolute fake out in Bitcoin, and could this BlackRock news be complete exit liquidity and then everyone exit the market, sell on the news, etc.? Yeah, quite possible. So just bear it in mind, but it is looking positive. We're at green for the month, and we are green on the quarterly as well so far. Post a comment below and as to what you think Bitcoin is going to do in the next coming weeks. Are you positive on Bitcoin? Do you hate crypto? Post a comment below. We want to know your thoughts. Lastly, I'm just going to show you the index price once again, and we'll just do the very quick macro view because we haven't done that for quite some time. So this is Bitcoin I'll show it to you on the monthly time frame, and this is the big macro view. So what you can see here, very clear trend line, has held so far. That's when BlackRock just right on June 15th, when they announced the Bitcoin ETF right there, turned it green for the monthly time frame, turned it green for the 3 monthly time frame as well. And what you can see here, a couple of indicators. Of course, you've got the relative strength index down the bottom here on the monthly time frame. If you have a look, what we've done, and I'll see how close I can get, how well I can zoom in. What you'll notice here is we are back above this yellow average line, and we have held so far, generally a positive sign. What you'll notice right here is we didn't break above until back in, this is April of 2019, and we spent a decent amount of time. We had that big rise up and back up to about that 13 to 15,000 move. It acted as support right here, and it was rough. I would call that support. It was a fake out and then a break above, and that's when you had, again, the COVID move, the black swan event that you can't account for. So again, I think if COVID hadn't have happened, you could completely erase that, and this would have held above the yellow line. So you can't account for black swans. So I think that would have held above that line, and we would have just continued above, and we did continue above up to that 65 to 69k, breaking down below in May of 2021 for a long time, and we didn't break above the yellow line until February this year. So a lot of people believe that's a positive sign for the longer term price of Bitcoin, the fact that we're back above this trend line. this average of the relative strength index, this yellow line right here. So I think that's positive too, in my humble opinion. Let me just get rid of that. I'm going to pop that down, and you can see quite easily we've definitely been on a longer term bull market. I mean, of course, it opened at, a penny back in 2009. And what I've got drawn in here, a couple of things. Of course, I've just got this little $100,000 marker. Doesn't mean I think it's going to get there in any particular time frame. I just like to have that as a marker, just as a reference point. We also have these. These are the previous halving points, and this is the next one coming up in around about your April, May of 2024. What you tend to find happens is that before a halving, you have a pump up to it, and sometime before it, you have a little bit of a sell-off, and then you continue on your merry way after the halving, at least for the first 1.5 to 2 years after a halving. And if you come back up to here, we had the pump was a little bit earlier. That was back in June of 2019. You had the dump right here. Again, you could have raised that, in my humble opinion, if COVID didn't happen. So it would have been more like a consolidation, have the halving, and then around about 1.5 to 2 years in, that's when you top out, back down for about a year or so, and then you continue on your merry way. So people are thinking about, well, the halving's coming up again in April of 2024. So, and plus the BlackRock ETF, a lot of speculation. So what you might find, and again, this is not financial advice and not the advice of Ainslie, what you might find is we come up to possibly that $48,000 level around about here. I'll pop in a horizontal line. This is all pure speculation, definitely not saying it's going to happen. But if a similar thing plays out where you have a top out and then a consolidation before the halving, then I think the most logical outcome would be around about your 48 to 50,000 US dollar mark before we see a little bit of a sell-off before the halving, and then after the halving on its merry way up. Where it tops out at after the halving, I can't say. What you have tended to find and what other people have noticed is during the 4-year cycle, you tend to have a top at around about your November to December timeframe. If you can see right here, this is in 2013. The top was around about November, December. Here, the top was around about November, December. 4 years later, you had the top at around about November, December. So that's a 4-year gap. That's a 4-year gap. And the next 4-year gap around about November, December hits around about here. So that's, rather than a dollar time frame, maybe consider what the time frame is rather than a dollar time frame. Rather than a dollar value, a time frame value. So around about November, December would be on par with where it would top out based on the 1, 2, and 3 previous times, the 3 previous peaks. So consider November, December of 2025, that is, to be a possible topping out point. Where it hits remains to be seen. Some people are calling for around about your sort of 140 to 150. Some people believe that it might go great guns and it might, this uptrend line, this very long uptrend line might act as the next one. So we're talking, that's like nearly 3 million. I don't think we'd get quite that far, but around about that general sort of definitely over 100,000 in my humble opinion. 100, 200,000, probably easy if we do continue up and if the pattern plays out like the previous cycles. That is Bitcoin. So Bitcoin pumped this week. Gold has dumped. I use the word dumped because it rhymed more so. So you wouldn't have called it a massive dump, but we do still need to hold above that long-term downtrend line right here. Got to hold it, and let's see what happens. So please post your comments below what you think. Are you bullish on gold and silver over the long term? Are you bullish on crypto as well? I want to hear from you. Of course, I'd love you to subscribe to the channel for all the stuff that we do weekly, including our insights, etc. Out of interest, we're going to be having Ben Simpson, and I want you to follow Ben Simpson right here from Collective Shift. We're going to be having Ben Simpson on on our Insights videos sometime in the next few weeks. So we have a great chat to him about crypto and probably precious metals as well. So watch out for that. And of course, hit the big red subscribe button to join us, balance your wealth in an unbalanced world. Take care, and we'll see you next time.